When is an activity regularly carried on for nonprofit UBIT? Imagine running a charity and wondering if your side business might trigger a tax bill. That's what we're here to figure out today. When does a nonprofit's activity count as being regularly carried on for the purposes of the unrelated business income tax? Let's break it down. The phrase regularly carried on comes straight from the Internal Revenue Code. It means the activity happens with enough frequency and continuity to resemble a business run for profit. It's not just a one-time event or a rare occurrence. The IRS looks at whether the activity is ongoing and whether it's done in a way similar to a commercial business. Think about how often the activity happens. If it's a one-off event like a charity auction once a year, it's probably not considered regularly carried on. But if your nonprofit runs a coffee shop every weekday, that's more likely to meet the standard. Continuity is about whether the activity is persistent over time. A short event lasting a few days or weeks usually isn't enough. But a business that operates weekly or monthly, especially if it's advertised publicly and competes with for-profit businesses, probably is. The IRS also compares the activity to how a for-profit business would operate. If your nonprofit's activity mirrors a commercial operation in scope, duration, and intensity, it's more likely to be seen as regularly carried on. For example, seasonal activities like a ski rental shop open only in winter can still be considered regular if they follow the same pattern as other businesses in that industry. Practical tips for nonprofits include looking at how often they do the activity, how long it lasts, and whether it's similar to a business. Occasional fundraisers like bake sales or annual raffles usually don't count as regularly carried on, even if they sell goods or services. Activities that happen a few times a year and are short in duration are also less likely to be considered regular. But if your nonprofit operates a thrift store selling donated items every weekend, that's more in line with regular activity. There are some exceptions. If most of the work is done by volunteers, the activity might not be considered regularly carried on, even if it happens frequently. Services mainly for members, students, or employees like a school cafeteria are also excluded from UBIT. Selling donated goods, such as at a thrift shop, generally doesn't trigger UBIT regardless of how often it happens. The IRS provides examples to help clarify. For instance, a yearly raffle might be considered regular if it's a significant part of your income and resembles a commercial activity. But courts have sometimes disagreed if the activity is brief or not ongoing. To stay compliant, nonprofits should keep clear records of how often, how long, and how the activity is conducted. If there's any doubt, consulting a tax professional is a smart move. Remember, if your nonprofit earns $1,000 or more in gross unrelated business income, you will need to file IRS Form 999-T. In summary, an activity is regularly carried on if it happens often enough, lasts long enough, and resembles a commercial operation. The key is to look at the pattern of activity, not just isolated events. By paying attention to these details, nonprofits can better understand their tax obligations and avoid surprises. Keep good records, and when in doubt, seek professional advice.